Welcome to a deep dive to a financial innovation that's really changing how we shop and pay. We're talking about the buy now, pay later, or BNPL market. Our mission today is basically to unpack its explosive global growth. We'll explore the surprising numbers across different regions and countries
Hmm.
and try to understand the core forces driving this digital payment evolution. We've got some fascinating market research to guide us. Okay, let's unpack this.
Yeah, and what's truly striking here is just the sheer speed, the speed at which this model has expanded globally. It really signifies a fundamental shift in how consumers prefer to manage their finances and make purchases.
Absolutely. So, to set the stage, the global buy now, pay later market was valued at nearly $19 billion. That was back in
So it's
2021.
million, billion.
Yeah.
That's a pretty significant figure right out of the gate.
And here's where it gets really interesting. That number is projected to reach almost 28.4 billion by 2025 and then surge. We're talking over $63.4 billion
Mhm.
by 2033.
So this isn't just a bump, it's really sustained expansion. It's represented by what analysts call a compound annual growth rate, or CAGR. That's around 10.6%.
Okay, CGR.
Think of CAGR as the steady annual rate something grows over a period. It sort of smooths out any year-to-year jumps or dips.
Right, so 10.6% CAGR.
Mm.
We're talking consistent double-digit growth year after year for over a decade. This expansion, it's not just about the big numbers, though, is it?
Not at all. Not really. It signifies that these installment-based digital payments are becoming a deeply preferred choice for consumers. It's quite clear. They're looking for flexibility, in managing purchases. And BNPL provides that in a very, very accessible way.
That brings us to a crucial question, then. What does this all mean for different parts of the world? Is it the same everywhere? Or are there specific regions, specific countries even, that are truly driving this BNPL boom?
That's where the regional data tells a really compelling story. If we zoom out a bit, the Asia Pacific region definitely stands out, a major growth engine. It was valued at about $4.6 billion in 2021, and it's projected to nearly quadruple. It's heading towards over 17 billion by 2033.
17 billion. Wow.
And its CAGR is almost 11.6%. That's actually the highest regional CAGR globally.
Okay, so APAC is clearly leading the charge. What's driving that kind of explosive growth within the region? Is it one thing or?
It's multifaceted, really. Within APAC, you've got China seeing massive expansion. It's projected to quadruple its market size to nearly 5 billion by 2033, growing at almost 11.8% annually.
Huge numbers.
Yeah, and this often comes down to a massive digitally native population, and in many cases, let's say, lower historical penetration of traditional credit cards. So BNPL becomes a highly accessible alternative for many people.
Right. And you mentioned India earlier. The standout here for me is India, which boasts the highest ROA GR among all countries globally,
Well,
over 12.5%. It's set to jump from just under 600 million to over 2.4 billion.
yeah.
What makes India such a unique growth story here?
India's growth is truly remarkable. It reflects a massive young population that's rapidly adopting digital payments. Plus, you have a surging e-commerce market and just a real desire for flexible payment options, often in places where traditional credit lines are less common.
Makes sense.
And Southeast Asia is also a significant contributor, about a 12.25% CAGR there, moving towards 1.2 billion. And then you have other major economies like Japan, South Korea, Australia, Singapore, Taiwan. They're all making strong contributions to that regional picture as well.
So a very dynamic and diverse picture in
Yeah.
Asia. Okay, let's turn our attention now maybe to North America. What's the data revealing there?
North America, right. It generated about $7.6 billion in 2021, and it's forecasted to hit over $24 billion by 2033. So still very strong growth with a robust CAGR of about 10.1%.
And within North America, how are the different countries contributing to that?
Well, the United States, as you'd expect, is a significant market. It's poised to reach almost $20 billion by 2033. That's up from roughly $6.3 billion in 2021. But what's particularly interesting, I think, is Canada. It's expected to show even stronger relative growth, about an 11% CAGR, set to reach 2.3 billion by 2033 from around 665 million back in 2021.
Higher growth rate than the U.S. then. Interesting.
Yeah. And Mexico also contributes significantly. It's projected to reach nearly 1.9 billion by 2033.
Okay, let's cross the Atlantic. What about Europe?
Europe's another flourishing market. It was valued at about 4.1 billion in 2021, and the estimate is for it to grow to nearly 12.9 billion by 2033.
And which European countries are leading that charge? similar patterns.
The UK and Germany are definitely key players there. Germany, in particular, shows a pretty impressive CAGR, nearly 10.9%. It's set to expand from roughly 800 million in 2021 to over 2.7 billion by 2033.
Okay.
And then countries like France, Italy, Spain, Sweden, they're also contributing substantially to Europe's overall growth picture.
It's clear this is truly a global phenomenon, isn't it?
Mhm.
What about, say, South America and the Middle East? Are they part of this too?
Oh, absolutely. South America's BNPL market was worth about 1.3 billion in 2021. It's projected to hit over 4.5 billion by 2033, with a CAGR again nearly 10.9%. Brazil is really leading the charge within that region, followed by Argentina and Chile.
Hmm.
And in the Middle East, the market's also gaining significant momentum, growing from just over $1 billion in 2021 to nearly 3.4 billion by 2033. Saudi Arabia, Turkey, the UAE, they're all showing strong TGR, somewhere between 11% and 11.4%.
Okay, impressive growth across the board. And finally, let's not forget Africa. What's the picture there?
Africa's BNPL market is also on a strong trajectory. It reached about 455 million in 2021, and it's expected to hit over 1.5 billion by 2033.
Still significant growth.
Definitely. Nigeria and South Africa seem to be leading the growth within the continent. It reflects similar pattern, increasing digital adoption and that desire for flexible payment solutions.
So we've seen these truly staggering numbers globally, double-digit growth nearly everywhere. But these aren't just statistics on a page, are they? What's actually fueling this widespread adoption? What's the engine behind this massive global pivot? Why now?
That's a fantastic question because the data suggests it's really becoming a foundational pillar of digital commerce now, not just a trend. And the data points to several interconnected factors. For instance, think about the kind of instant gratification culture.
Right.
BNPL lets consumers, especially millennials and Gen Z, get what they want now, often without the traditional credit checks or the high interest rates you might see with credit cards. So this appeals really strongly to younger demographics. They might be credit averse or maybe just have less established credit histories.
Okay, so it's about access and ease, definitely.
Hmm.
But is there more to it than just, simple convenience?
Absolutely, there is. During times of economic uncertainty, for example, like we've seen recently, it offers a kind of perceived safety net. Breaking down larger purchases into manageable, often interest-free installments, well, it can feel less daunting than paying a lump sum or racking up revolving credit card debt.
That psychological aspect.
Exactly. And then there's the rapid rise of mobile-first payment ecosystems. BNPL is perfectly integrated into the digital checkout experience online. It's often seamless.
Just a click away.
Precisely. These are all significant drivers, and they're transforming how consumers approach purchasing.
So we've taken quite a deep dive into this incredible surge of the buy now, pay later market. We've looked at its impressive global trajectory, the specific growth engines in regions like Asia-Pacific, and those surprising breakouts in countries like India and even Canada.
Yeah, and we've seen how this financial innovation is truly transforming consumer behavior. It's really reshaping the whole landscape of digital commerce. It's empowering consumers, fundamentally, by offering flexibility, and it's reshaping how businesses approach checkout, lending, customer engagement. It's across the board, really. Its impact is truly global and seems to be continuously expanding.
So for you, the listener, what stands out most from hearing all these numbers? Maybe think about how this global shift in payment preferences might influence the future of traditional credit models, or even how you plan your own purchasing and finances going forward. It's certainly something to mull over as this trend continues its rapid climb.
Okay, so you're shopping online, right? You find something you want, maybe it's a bit pricey, and then at checkout you see it split into 4 easy payments. That's buy now, pay later. We see it everywhere now. But it's more than just a button. It's really changing things, how we shop, how businesses operate, even how we think about credit. So today we're doing a deep dive into BNPL. We want to unpack it, figure out what's fueling this huge growth, what problems it's running into, and honestly, where this whole thing is headed.
Yeah, it's definitely not just a fad. It's genuinely shifted how people, especially younger consumers, are purchasing things. It's fundamentally redefining that interaction. So yeah, understanding its impact now is pretty crucial.
Absolutely. So let's unpack this. What is actually fueling this incredible market shift? Where did all this momentum come from?
Well, a huge piece starts with us, the consumers. There's been this real shift, particularly with millennials and Gen Z. They're actively looking for options besides traditional credit cards.
Seeking flexibility, maybe? Avoiding that high interest?
Exactly. They want flexibility, often those interest-free installments you see advertised. It's a way to get bigger ticket items without immediately racking up, scary credit card debt.
Mhm.
BNPL steps right into that need. It boosts your buying power, makes things super convenient.
Which explains why it's everywhere. Fashion, electronics.
Oh yeah, fashion, tech, home goods, even travel now. It's really broad.
And that convenience point, it ties right into the second big driver, doesn't it? The massive explosion of e-commerce.
Oh, absolutely. That's the perfect environment for BNPL to thrive. Online shopping just keeps growing, and retailers are smart. They saw BNPL wasn't just a payment option, it was a tool
A tool to do what specifically?
to tackle things like cart abandonment. People putting stuff in their cart and then
Yeah.
leaving. BNPL makes that final step easier, so it helps retailers boost their conversion rates, turn browsers into buyers.
And the tech makes it smooth. You mentioned those seamless API integrations. Sounds technical, but what does it mean for the shopper?
It basically means it's incredibly fast and easy at checkout, like a digital handshake happening behind the scenes. The retailer site talks instantly to the BNPL provider. You click the button and boom, near instant decision. No long forms, no waiting. It's designed to be frictionless finance.
Okay, so consumer demand, e-commerce boom, but the underlying financial world must have played a role too, right? Like
Yeah.
the credit environment, fintech innovation.
Definitely. And this is where it gets really interesting. You had factors like relatively low interest rates for a while, which helped fuel investment. Plus, a real shift in lending models, powered by fintech startups using AI and machine learning.
How does that change things compared to, say, applying for a normal credit card?
Well, traditional checks look heavily at your credit history, right? Your
Yeah.
score. BNPL services often make instant decisions without that deep dive, or at least using different data. They leverage real-time information, maybe your purchase history with that retailer, other digital footprints, using algorithms to assess risk very quickly.
So it's not just about your past credit score.
Not solely, no. It's often a broader, faster snapshot. And that makes it more inclusive. Think about people new to credit, maybe young adults, or those the traditional banking system might consider underbanked. BNPL can open a door for them.
Right. Access.
Exactly.
Yeah.
So you've got this model that's scalable, low friction, and inclusive. It really hit a sweet spot, especially with economic uncertainty and everyone moving online faster.
Okay, it sounds like a win-win, but growth like this always comes with challenges. There must be some significant hurdles BNPL is facing now.
Oh, absolutely. With great growth comes, well, significant challenges. And the biggest one, the one everyone's talking about, is consumer debt.
The risk of people spending more than they can actually afford.
Precisely. The ease is fantastic, but it can also make it easy to overspend. Splitting payments makes the total cost feel smaller, psychologically.
That mental accounting trick.
Yeah. And you might have multiple BNPL plans running at once for different things. It can stack up quickly, especially if you miss payments and those late fees kick in, or if interest starts accruing.
And young adults might be particularly vulnerable.
Potentially, yes.
Okay.
If you don't have strong financial literacy or good tools to manage those repayments, it can become a debt cycle. That's why regulators and consumer watchdogs are sounding the alarm.
Alarms about what specifically? Lack of transparency.
Transparency in terms, yeah. Potential for financial harm if people don't fully understand what they're signing up for. It looks simple, but the details matter.
Which leads us to the regulatory side. You mentioned regulators. Is BNPL treated like a traditional loan?
That's the tricky part. Often it's operated in a bit of a legal gray area, not always subject to the same strict rules as credit cards or personal loans.
So, like, the Wild West of credit for a while.
Kind of, yeah. But that's changing fast. Many countries are now stepping in, implementing new rules.
What kind of rules?
Things like mandatory affordability checks, making sure the provider actually checks if you can realistically repay, clearer disclosures about fees and interest, treating it more like proper credit.
Which must put pressure on the BNPL companies themselves.
Huge pressure, especially the smaller fintech players. Adapting to new regulations, the compliance costs, changing how they operate. It's a significant burden and could squeeze some out of the market.
And is their basic business model even sustainable long term? How do they actually make money?
That's another challenge. Their main income is usually fees they charge, the merchant, the retailer, for each transaction.
Okay.
But competition is fierce. You have lots of BNPL providers vying for those retailers. So they get pressured to lower their fees or offer incentives, which eats into their already quite slim profit margins.
So it's a high volume, low margin game.
Pretty much. And they're also very dependent on retail sales cycles. If consumer spending dips, like in an economic downturn or even just seasonal lulls, their revenue takes a hit. It adds a layer of financial volatility.
Okay, so real headwinds there. Debt concerns, regulations tightening, tough business model. But clearly it's not dead. It seems to be evolving fast. What exciting trends are reshaping BNPL now?
Yeah, despite the challenges, innovation is definitely happening. What's fascinating here is how BNPL is moving beyond just online checkout.
You mean like using it in actual physical stores?
Exactly. Integrating it into the in-store experience. Think QR codes at the register, tapping your phone, using the BNPL app to pay right there at the physical point of sale.
Omnichannel, that buzzword.
Right. But it makes sense. It creates a seamless experience whether you start shopping online and finish in-store or vice versa. It meets the customer wherever they are. And retailers like it because it can boost average order value, even in brick-and-mortar settings. It unifies the whole retail journey.
And it's not just the specialist fintechs anymore, is it? I feel like I'm seeing big, established names getting into BNPL.
Oh, that's a massive trend.
Yeah.
Huge. You've got tech giants like Apple dipping their toes in, PayPal has its own version, and even traditional banks are launching BNPL features or investing in existing players.
What does that mean for the market when the big guys jump in?
Well, a few things. It brings BNPL even more into the mainstream. It adds a layer of legitimacy, maybe trust for some consumers.
Because people already trust their bank, or Apple, perhaps.
Exactly. It expands accessibility massively. And crucially, these larger, often regulated institutions bring more structure. They're used to compliance. Their involvement likely accelerates the move towards a more stable, regulated ecosystem.
Which ties into another trend you mentioned implicitly, this shift towards more responsible practices.
Yes, definitely. As the market matures and regulators pay more attention, there's a clear push towards responsible lending.
How does that look in practice?
Well, one big step is integration with credit bureaus. Some providers are starting to report BNPL payment history.
Oh, interesting. So using BNPL could actually help build your credit score now.
Potentially, yes. If you use it responsibly and make payments on time, it could contribute positively to your credit profile. That's a big shift from the early days. We're also seeing better repayment management tools, clearer spending limits, more robust affordability checks before you're approved, helpful reminders for due dates.
Trying to prevent people from getting into trouble in the first place.
Right. It's all about building trust, reducing defaults, and meeting the expectations of, well, everyone, consumers, regulators, even the credit scoring agencies.
So bringing it all together,
Yeah.
what does this all really mean for us, for the future of how we pay?
I think the key takeaway is that a buy now, pay later isn't just some niche trend anymore. It's really become a core part of the financial landscape, a revolution, as you called it.
Yeah. Driven by that digital shift, our changing habits as consumers, and some pretty clever fintech. It's reshaping consumer finance.
Absolutely. But its future, its ability to keep this global momentum really hinges on tackling those challenges we talked about.
Transparency has to be key.
Transparency, prioritizing responsible lending, and figuring out how to work within these evolving regulations. That's crucial for sustainability.
It definitely feels like the future of payments is here, though. It's flexible, it's digital.
And very customer-centric, for better or worse. It puts the payment options right there, tailored to the moment.
Which leaves us, and you listening, with something to think about. With all this flexibility at our fingertips, what's our responsibility in navigating these new ways to pay? And, maybe more profoundly, how is this relentless shift going to change our whole understanding of credit, debt, and financial well-being in the years ahead?